After an insightful lesson about money by Mike's dad, Robin and Mike realized that too many people are focused on money and not their greatest wealth, that is, their education. People think that money will solve problems, but even after acquiring money, their problems keeps piling up. Whereas it's the intelligence that solves problems, and money without financial intelligence is money gone too soon. Robert was indeed glad of both of his dad, as his educated dad stressed the importance of reading books, while his rich dad stressed the need of financial literacy. Robert and Mike's first step towards financial literacy was to learn accounting. Indeed, it was boring and confusing, but Rich Dad did make the whole process quite simple and interesting. He kept his word short and used more of pictures and drawings. The first rule was to have a perfect idea about assets and liability, as Rich Dad focused that rich acquired assets, whereas poor and middle class acquire liabilities thinking that they are assets. Mike asked, "What are assets and liability?" Rich Dad replied, "Assets put money in your pocket. A liability takes money out of your pocket." It may sound simple, but even highly educated adults get its definition quite twisted, because they either get the concept messed up or they just read numbers but not what those numbers are trying to tell. Mike and Robert were curious to know more. Rich Dad introduced the concept of balance sheet, profit and loss statement, income statement, and cash flow, and pointed out the vital importance of the relationship between all these concepts and how many people struggle with this. Rich Dad first explained how money works in the life of poor and middle class person and how they were never taught how to manage money. They simply followed the crowd and listened to advice of people who never took any risk and played safe. He explained number one expense of people, that is, income taxes, and how on top of this other taxes like Social Security, Medicare, etc. Once they somehow keep some money left, they put it all in buying a house, car, furniture, appliances, on mortgages and credit card debt, piling up the liability column. They don't realize that they're making those decisions under emotions, not intelligence. And high emotions tend to lower financial intelligence. Robert and Mike continued to work for Mike's dad after school and sometimes let them into his meeting. Robert and Mike learned more in those sittings than in school and college included. And in nowhere their college grade decided their life and their future. They realized that by playing like poor and middle class people, they'll lose every opportunity to generate wealth, as their money will be locked forever in those acquired liability. Robert comprehends that in his educated dad financial statement, his income matched his expenses, that eventually never allowing him enough left over to invest in assets, pushing him into greater debt. All his money, time, work was busy in making the company, government, and the banks rich. And after years of service, he was left with nothing, as he couldn't do anything for his own self. Mike and Robert were realized why majority of people are self-made poor, and how their financial illiteracy made their life miserable, and why it was important to anticipate the financial traps. Rich Dad further assured to teach them both about money and finances in coming time.